Time to bring in Don Gimbel, portfolio manager, Carret Asset Management, joining us all the way from the wilds of Montana. Don Gimbel, good to have you with us. I understand the fly fishing was great this summer.
Well, once it started, once the river cleared up, it was good, but we had such a heavy snowpack and so much rain in June that the rivers really didn't clear until the 1st of August.
So can you give us a clear signal for what's going on in the world of investment? How's that for a segue? Are they muddy right now?
How about confidence?
Oh, come on.
Or the lack thereof.
The lack of confidence.
I mean, everything else is in place. The economy, grudgingly, is starting to look a little better around the edges, although not as rapidly as we had hoped. But the lack of confidence, not just here in the U.S., and not just in the White House, but in Congress, in Germany, in France, in Italy, in Spain, blah, 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 the new prime minister in Japan. I mean, what the heck are we going to do if we don't have any leaders?
Well, what's there to be confident about? You take a look at GDP growth in the United States. It is way below trend coming out of a recession, albeit it was a financial crisis, so we get to have a big footnote there. So you have GDP that is below trend. You have unemployment that is above 9%. You have continued stimulus either from the federal government or on the part of the Federal Reserve. Why should people have confidence in the way the economy is moving?
Well, look at the balance sheets and look at the valuations of major U.S. companies, major European companies, major Asian companies, and you say to yourself, they've priced in the end of the world. Well, the end of the world, we're not going to know when that's going to happen. So things are going to get better. Now, when are they going to get better? That's anybody's guess. But I would say that we're awfully close to the nadir, if you will, of economic inaction, and we're grudgingly starting to get a little better. So looking down the road, 12 months, 18 months, 24 months, I think the buys that people make in the next month or so are going to prove to be very attractive and good entry points. And so many of these companies are yielding a multiple of what treasuries yield. Of course, treasuries don't yield anything. So, but you can build a nice portfolio of good companies globally with yields of 3 to 5%.
All right, well, given that, though, that would presume that people have the cash to go ahead and do this. And what makes you believe that people have actually socked away the cash? They haven't ridden the market for the last 10 years and said, you know what, Don Gimbel, I don't want anything to do with the stock market. I haven't made any money in a decade. Why would I throw good money after bad?
Well, the fact is, Pimm, that a lot of people do have a lot of money in the bank on which they're getting nothing, and they're very itchy about that. They don't want to make another mistake. I mean, in the last decade, you've had 2 major contractions in stock prices. So, you know, is 3 going to be their unluckiest number? Who would know? But I can tell you that if you can buy a good quality company that's yielding now 3, 3.25, 3.5, 4%, and you're willing to wait, these companies with strong management, good quality, good clean balance sheets, these companies are going to be much better investments than the 10-year Treasury at what? 0.2 or something.
I was going to say, let me show you 2 numbers to get your thoughts here. The 10-year Treasury, 1.92% versus the 10-year Greek government paper. I think we're talking over 55%. You could get a double if you believe that Greece is not going to default. You could drive a truck through those numbers.
Well, but the market's telling you that 2 years from now, you're not going to get your money back in Greece.
You think there's going to be a default?
I think there will be renegotiation of the terms of that paper.
So it won't be a technical credit event then?
Well, if you ask yourself, for whom is a default in Greece or Italy or Spain or Portugal, etc., for whom is that good? And the answer is nobody. It's not good for the country. It's not good for the banks who have the paper. So the chances are there will be some kind of a compromise to extend the maturity dates. And I think that's what's going to happen.
Why wouldn't it be good for the Greeks right now? The tax collectors are even on strike as we speak. The government came out today and said they were going to increase property taxes, but the tax collectors are out on strike. If they go ahead and default on the debt, then they don't have to worry about pressure from anybody else, and they can decide what they want to do with their money.
And when they turn around and want to borrow money, who are they going to borrow it from? Because nobody's going to lend money to them. If, on the other hand, I had a 2-year piece of paper and I was told, well, you know, you're going to take a little haircut and the maturity is now 3 to 5 years from now, you'll swallow your pride, and you'll know that eventually you're going to get your money back, and you're going to get some interest along the way, and you'll probably lend a little more money. Not that I'd be there, but there are people that will.
All right, Don Gimbel, talking about confidence, where are you looking to invest your customers' money right now?
That's a great question, and the answer is, what's the hurry? Somebody once said, well, you got to try and catch the falling knife. I said, why? You just get blood on your hands, even if you're right. So I would suggest that over the next month, we probably will be committing some more money to Asia, where there has been a huge exodus of American money from good quality Asian stocks. Again, where we have now low price earnings multiples and decent yields. We're going to be looking more, again, there's been a huge sell-off in South America, especially Brazil. Brazil has a big future if you can think a little farther down. Brazil got hit this past week when they cut interest rates.
That's right.
I think they were a little premature in doing that. They do have a small inflation problem. Inflation there is probably 6-7%, which is well above their guidelines. But you've got the largest population in South America. You've got an economy that actually is chugging along pretty well, not as well as it has for the last couple of years. But
got high inflation.
Yes.
$35 martinis.
Well, maybe you've got to switch to scotch. I don't know.
So what are they going to do?
They will be putting the brakes on the economy a little bit to try to squeeze out some of the
Ramp up interest rates?
Well, since they just lowered them, it'll probably be 3 months before they do anything from here. And we've got to see whether the strong currency is going to continue. I mean, we've had a little spike in the U.S. dollar here the last little bit, and you ask yourself, gosh, with everybody rubbishing the U.S. economy, why is the dollar strong? Well, if you look at Japan or you look at the euro, you got to say, well, they probably have more problems and more long-lasting problems from here than the United States does. So we're seeing a little money come back here. I think for my investors, I think good quality American companies that derive a lot of their income from international investment probably is the right way to go. And I can tell you some of the names that we have in our portfolios.
Go ahead, go for it.
Yeah, well, I mean, we have Caterpillar, we have Pepsi, we have Walmart, we have Home Depot, which is now going quite international.
You're betting on economic growth outside the United States.
Well, that's it. I mean, the world's economies are probably going to grow 3 to 3.5% this year and next year, which is a fair bit more than the U.S. I think U.S. this year is going to be 2.5, 2 3/4, something like that. And next year's sort of an open book. It's an election year. People are incredibly pessimistic. Companies are afraid to hire because they don't know what their costs are. So I think that the investments in Asia going forward, where you have the consumer spending still picking up, is probably the right place to be.
Domestic consumer spending.
Yes.
So not necessarily exporting products to the United States or the developed world.
Well, exactly. I mean, you're seeing a real change, say, as an example, in China, where imports are rising faster than exports. So it's interesting stuff going on around the world.
Now, you're going to Australia. You're off to Australia soon.
Next
what are you
month,
going to specifically look for?
I'm looking to see if the banks are cheap enough and the economy is not about to fall off a cliff, whether the banks are a good investment.
Why would the economy be about to fall off a cliff? I thought that they're the big commodity-producing engine for Asia.
Exactly. But if the economies around the world growth rate is going to slow a little bit, then the demand for what they export is also going to slow down. And so prices, although they won't collapse, I think costs might rise faster than sales. And so I think Australia's at a very interesting tipping point. And so I want to, firsthand, my usual, going around, seeing the companies in which we invest, visiting with people in government, to see where they think they're going to be 6 months, 12 months from now. And then when I leave there, I'm going to go up to Singapore and then up to Beijing, spend a little time in Beijing looking at companies, and then go down for a conference in Hong Kong just before Thanksgiving.
You're practicing up on your Australian just so that they understand what you're saying?
Yeah, I keep saying g'day, you know, it's that.
And they'll get it?
And they'll get it, you know. Let's have some Tucker, that's always a killer.
Do you think it matters whether the president's jobs bill gets passed?
I'll tell you, I don't think the president's job bill will be passed. I think that Congress can't agree on anything. It's a real sore spot with me. The Republicans are blaming the White House. And I would tell you that leadership has to come out of Congress, and there isn't any, and that's a real problem. And you know, parts of the job bill will be passed, but it's too little. And you know, you need confidence in your government to make plans for companies and small companies and for families, for that matter. And until we see that, and I'm not sure we can wait a year and a half for a change in government, if it happens, for things to start changing. And I throw my hands in the air just like most of us, most of my friends and you, I'm sure, feel the same way, that now is a very different time. I've been in this business 42, 43 years, and I can't remember seeing better balance sheets, better valuations, and lack of confidence because of our political system. So it's interesting.
And then how do you
times.
respond to customers when they call and they say, Don, take a look at the portfolio. The companies may be doing great, but look at the amount of money in my account.
Absolutely. And here, yesterday, I had a very interesting conversation with an elderly client, and his portfolio has a current yield of about 5% dividends. And I said to him, Bill, we could liquidate your account, and we could replace your 5% yield with 1%. Is that what you want? I mean, and I said, you know, the companies we're invested in are good quality companies. They're going to be here 3 years from now, 5 years from now, 10 years from now. And yeah, we've had price declines, but the chances are over the foreseeable future, not only will those prices recover, but they'll raise their dividends. So, and he said, well, you know, you're probably right. And I said, you got to stop looking at the market every 10 minutes. You got to think about the fact that the management of companies are your partners. We invest with partners. And, you know, it's very important for them to do a good job for themselves as well as for the other owners of the company. And that's my philosophy.
Partners, not just prices. I want to thank you very much. Don Gimbel, Portfolio Manager, Carret Asset Manager.